I want to sum up exactly where are we this Thursday morning. All right, stocks at record highs. The housing market is coming back nicely. I got more on those foreclosure declines shortly. And the economy, it is growing slowly. Some people might say that printing money, good old Ben, has been good for America. Peter Schiff, of course, will not agree with that. And here he is. All right, Peter, before you launch, have you got nothing good to say about what Ben Bernanke is doing? Because he has got interest rates down. He has helped the housing market. He has helped push people into stocks and away from bonds. Come on, he has.
No, I mean this is monetary. We were just talking about. Why am I at a loss for word? Monetary caffeine. That's it. That he's injecting into the economy. It's no good. You know, the market is rallying, but it's rallying for all the wrong reasons. Stuart, I mean, if your child brought home an A on an exam, but you knew he cheated on the test, are you going to be proud of him?
Well, okay, hold on a second. You can't just dismiss it. I mean, because a lot of people are making a lot of money. The average wealth of Americans is going up. As homes go up and as housing goes up and as stocks go up, they feel more wealthy. Whether it's because of Ben printing money or anything else, doesn't really matter, does it?
Well, sure it matters. And, you know, people felt great as the housing bubble was inflating in 2003, 4, 5, and 6. We're just blowing more air into the same bubble. Look, if we had a more responsible Federal Reserve that wasn't monetizing all this debt, they weren't printing money and buying treasuries and buying mortgages, if they let interest rates go to a free market price, the Dow Jones would be thousands of points lower right now. And eventually, because this is a phony gain, either all the gains are going to go away when the Fed takes away the punch bowl, or if it never takes away the punch bowl, the gains are going to be meaningless because they're going to be obscured by massive inflation.
Well, hold on a second, Peter. Look, I take your point. I really do take your point. But a lot of our viewers are going to say, well, there goes Peter Schiff all over again. He's bound to be right in the very long term. And you are. There will be another crash and a bubble at some point in the future, and you will be right. Meanwhile, you've now, or certainly a lot of our viewers, may have missed out on the housing rally and the stock rally because they're listening to you.
Well, no. I'm not telling people not to be in the market. Quite the opposite. I'm telling people that stocks are going to go up. I've been saying that for years. I prefer foreign stocks to U.S. stocks, but I've been telling people for years if the choice is between putting your cash under your mattress or in the bank, buying bonds or buying U.S. stocks, buy U.S. stocks. I'm just not going to lie to myself about why the market is rallying, and I'm not going to pretend it means that the economy is good or that U.S. corporations are really more profitable. They're not. It is all an illusion created by the Fed, and it's going to end very badly. And it's not way off in the distant future. This is not a problem that's going to come back to bite us in 10 years or 20 years. This is looming on the horizon. I don't know if it's this year, next year, the year after, but it's going to be a horrific crisis, much worse than what we had in 2008.
All right. Well, we heard it from you directly. Peter Schiff, we do appreciate that. Thanks very much for being with us again. Gotcha.